Welcome to my weekly review. You're looking at a daily chart of the Nasdaq, which is starting to take leadership here, as we talked about recently with the earnings reports coming in for their mega cap technology stocks. And it was lagging the Dow Jones, it was lagging the S&P 500. Now it's leading. How do I know? Well, it made a new high on Friday. It took out that 18,671 and made a new high. So anytime an index or a stock is making a new high, yeah, it took out 18,671, hit 18,690, which is higher than 671 by 19 points. But we can see if we take a look at a 5-minute chart, how it just ramped up to 690 and immediately reversed and headed lower. So it did make the new high, but then it reversed lower and closed, near the lows of the session. But anyway, it's caution ahead of next week's earnings report. This is a weekly review, so I will show the weekly view here on this market surge chart. We can see this rally has been lasting 2, 3, 4, 5, 6. It's getting, I think it's got more time in the rally. Usually rallies last, 10 to 13 weeks. And so I think we have a couple more weeks at least of this rally, and you could see the 18,671, which is made on July 11th, was taken out. So that looks like kind of a nice cup-shaped pattern there on the weekly chart of the Nasdaq. You can see it has been up, 7 weeks in a row there? 1, 2, 3, 4, 5, 6, 7. Yeah, ran out of fingers. That's all. But excuse me for toggling back and forth. Just want to point out it was only up 29 points last week, or 0.16%. The prior week, only up, less than 1%. So it's just going up gradually, just grinding higher. It's not making these 4 or 5% jumps. But you can see just grinding higher, finding support at the 21. It did pull back to the 21 on Wednesday, found support and bounced. If I could zoom in there, you can see that a little better as it pulled back, closed above, and then rallied back above the 10 on Friday. And let me get the percentages here above. It's 0.6% above the 10, 1.4% above the 21, and 3.5% above this rising 50. So it's in a power trend, looking good, making new highs. Anytime your stock or an index is making new highs, that's a good thing. And I'm not going to go through the SPY and the Dow. I'm just going to get right to the, because it's going to be a long video. I have a lot of things to cover. But we got to take a step back, as Phil Lesh would say. Rest in peace, as Phil passed away. It was announced on Friday, the bass guitarist for the Grateful Dead. But 2 weeks ago, Netflix reported and, had a nice response. I think it was 2 weeks ago, wasn't it? It was on that Friday. And yeah, had a nice response. And so did Intuitive Surgical. Had a nice report, sold off every day last week as it tries to allow the moving averages to catch up. So anyway, a couple nice reports 2 weeks ago. As we take a step back, last week we had one of these mega cap technology stocks report and have a real positive response. This is Tesla, and I know it's extended from its moving averages, 13.7% above the green 10 EMA, but you could see the RS line driving through the moving averages here, but it's still trading near a buy point there, a standard buy point, paint by numbers 264. So it's not stretched from a buy point, but it is stretched from its moving averages. And you see a large liquid leader like Tesla move like that. I mean, that's you got to pay attention. That is a big move not to be ignored. Anyway, another earnings report. And I can do a 3-hour show on earnings reports. I'm not going to do that. I'm just going to highlight some of them here from last week. This is ServiceNow. They reported, had a nice response, right? You can see it was up more than 5%. And you can see that it broke out of this base on the weekly chart and just, surfing its moving averages as it trades higher. And thank goodness the earnings report is behind it now. All right, yeah, because I'm showing you a lot of the ones that went higher, but eventually I'm going to have to show you some of the losers. And playing the earnings game can be quite dangerous. This is a CLS pullback, had this little bull wedge pattern, pull back to the 21 and popped on earnings. And then followed through on Friday, which is what you want to see if you're long the stock. Yeah, it was up 18% on Thursday and followed through with a 2% move on Friday. So that's Celestica, nice move in that electrical contracting manufacturing group. Deckers reported on Thursday. Hoke is just killing it. This is just consolidating in a base, and the move was what, 11% with that type of volume. That's a move not to be ignored. Obviously, it's got this, little area that it's got to, stay above here, that 167, 165, this little area here. You could see the relative straight line heading straight through the moving averages here. Really the standard buy point is here, I'm going to screw this up. 184.48, but you can see it's consolidating in a base here. It's got a lot of characteristics that I like. When entering a stock, it's shown the ability to, move higher, form a base, move higher, form a base, move higher. And now I know this is, later stage base, and it's been running for a while, but consolidating in a base, trading tight within the base, you can see here, now blasting through its moving averages. So there's a lot to like about this stock here. Deckers, strong report. Hoka reported 570 million in sales for the quarter. It was bought in 2012 for $1 million. So I'd say that's a pretty good deal for Deckers brand. So the new CEO starts off with a bang. Is Dave Powers, retired August 1st. This is Digital Realty, a REIT. This is a big move. You can see the RS line headed straight due north. Once again, this bull wedge pattern there. It closed at 5% of its daily range. So that is not what you want to see in a gap higher. But this little wedge pattern, as it pulls back to the 21, grinds higher and then pops with earnings. Still, nearly a 10% move for Digital Realty Trust. RMD ResMed. This is thought to be a stock that was going to be hit by the weight loss drugs, and apparently not. They reported pretty strong earnings, accelerating sales growth. That's what's going to drive a stock higher. Sales and earnings growth. 27, 30, 34 EPS and 7, 9, 11%. Increasing, accelerating sales growth. Yeah, as Peter Lynch says, you don't buy a stock just because this sucker is going higher. They've got to have earnings and sales growth to drive the stock to sustain a rally for a long period of time. And like I said, once again, this one's shown the ability to move, consolidate, trade tight within a base, pull back to a moving average. Now, you can't get super long ahead of an earnings report because it can go the other way on you. That's like flipping a coin. You got to practice risk management. But, now that the earnings data is out, made that big move, trading near a buy point. I know it's extended from the moving averages quite a bit here after that big move on Friday, but still a stock that, I'm kind of interested in here. Yeah. $17 move, 7%, close at 43% of its daily range. Big volume. So that's another one that looked good in the software group. APPF, Appfolio. This one been sold off. I mean, it looked like Armageddon was priced in here. This is well below its 200. And what happened here on Friday is it ran up to its 200 and then got rejected, closed at 11% of its daily range. So you want to see them close a little higher. Yeah, this one's been lagging recently. All right, good move though. Positive response to earnings, and that's all they can do. This is Booz Allen Commercial Services Consulting, kind of like a recruiter, right? Group. They've got accelerating sales and earnings growth, so the stock popped nearly 10%. So we're seeing a lot of positive moves on these earnings report. I'm going to get to the negative ones. Don't worry. This is Western Digital, and you could say this one traded above this, downtrending line here. As it traded tight within the base, near that moving averages, as the moving averages converge. Once again, though, closed near the lows, and we saw that on Friday. Just probably profit taking into the close. Yeah, 3% of that daily range, which is not good. But still a nice, nearly 5% move for Western Digital. Once again, 23, 41, 49% accelerating sales growth. That's what's going to drive your stock higher. The sales and earnings, not like Peter Lynch says, this sucker's going up. Gotta love Peter Lynch. All right. Texas Roadhouse and the retail restaurant group has been really strong. They reported last week. You can see that bull wedge pull back to the 21, pretty consistently here on Texas Roadhouse. As it ran up to that buy point, then pulled back to that 21, then ramped up, pulled back again to the 21, then popped on earnings. And it was up what I want to see the move on Thursday. Yeah, 1%, then moved another 3.5% on Friday. So nice move here. You can see that long period of consolidation. Once again, the ability to move higher quickly, ramp higher, consolidate, ramp, consolidate. Now it looks like it wants to move higher again. That's Texas Roadhouse. Who else responded positive last week? Boyd Gaming. They reported nice pop, nearly 8% on Friday. Once again, closed, in the middle of its daily range, which you want to see them close higher. And you can see on the weekly this double bottom base pattern here. This thing's been going sideways forever and a day. That's what you don't want to see. I mean, if I'm holding the stock and swing trading it, you want to see something like that, not that. I mean, that's just gone sideways forever. So maybe now it's time to move. It was up by nearly 7% last week. That's Boyd Gaming. All right, I'm going to get to the bad news. IBM reported, sold off, just pull back to its 50. It's got tepid growth. It needs a little juice and a little more growth here. And so it just pulled back to its 50. I mean, if you're a long-term holder of IBM, you just, it's done okay. The new leadership is doing a pretty good job there at IBM. Skechers reported, and they had a problem with their margins, too much promotions, too much giveaway, and then they lowered forward revenue and earnings guidance. So even though it was a good report, they got hit pretty hard here. And if you look at the 5-minute chart on Skechers, got the old okey doke, ramped up at the open and then see you later. Adios, muchachos. So hopefully you didn't buy that first 5 minutes. That's dangerous because that was a big move, and you could see that inverted hammer candle, ran up to 65 and closed at 59. That's not a good move, and closed at 3% of the daily range. So ouch for Skechers. Okay, another stock that reported last week pulled back to the 21, so it had kind of a negative profit taking, down 3.65%, but then had an inside day on Thursday, not bad, up 1.5%, then up nearly 2% on Friday. So what I'm looking for in Vertiv Holdings, first of all, very positive report. You can see 8%, 13%, 19% sales growth. They raise guidance, they raise sales guidance, and you could see the earnings numbers here, 46%. That's pretty strong earnings growth, 46%. And the management talked about, the AI demand is off the chains, and this thing's going higher, I think. But I want to see it take out the 116.41 here. If we take a look at the weekly, this is a weekly review. You can just see this is a pretty nice cup without a handle. It needs a handle pattern. So maybe it'll shake some fools out and then rip above that and make a new high. That's what I'm expecting with this one. You can see these big blue numbers, which is what we like. That's going to, drive the stock higher. It's got these smart guys, managers owning this stock. So this is a really strong name, and one that I own and one that I like anyway. This is my review, so I'm going to show stocks that I like. Carpenter, they reported. This has been one of the top stocks, in the top group here. Carpenter Technology, it's pulled back to its 50, and following earnings, had an inside day on Friday, but now it's below these moving averages, in between the 50 and the 21. So I'm going to watch that one. And then Fix, ouch, Fix, they reported strong numbers. I mean, you can't argue with 32% sales growth and 49% earnings growth, down from prior quarter though. And it sold off on Friday. All right, that's it for the earnings, I promise. But this is exciting times, and you get these new data points, you get new leadership, and some of the past leadership, they have market share taken from them, and they start, having new stocks emerge, like Dutch Bros, which is taking market share from Starbucks. They report on November 6th. I expect good numbers. And then I mentioned Starbucks with Brian Nickel. I mean, these guys have been hurting, right? If you look at a weekly chart, look at this, just straight down. So they got a boost with the new CEO, but we'll see what he does there. Anyway, that's it for earnings. I've got to get to some of the bad news for the week. ARM Holdings, this thing had a nice, let's go to the weekly chart, so weekly review, kind of a setup and a base here, and then it pulled back 6% last week because of their deal with Qualcomm. They cut their licensing deal, and this has been going on since 2021, but they announced it last week. Qualcomm didn't get hit as bad as ARM on that announcement, but it still kind of shook up the semiconductor space for a couple days there. Mentioned, it's very difficult right now with a lot of leading stocks are extended, but this is one, NVIDIA, which obviously is one of the liquid leaders, if not the leader in the group, and this one's still set up in a base. So it's kind of rare to find these because a lot of the leading names, which I'm going to get to here, are extended, and it's very difficult to buy them. You just got to wait for a pullback to a moving average because they're out of their bases and ripping higher and making new highs. Some of the other names in this group that I like is AVGO. It's a semiconductor fabulous name, big market cap, big company, big stock, reported earnings already, pull back here, and I don't mind this, consolidating within a base, shake some fools out near the 50. I wouldn't be surprised if this thing ramped higher. Yeah, it was down nearly 4% last week. Just pull back to a moving average. You can see it's a late stage base. Pivot area is about 185 for the standard paint by numbers, but keeping my eye on this one. This is another stock that I like a lot. And since I'm in the semiconductor names, I've got to go to ALAB. This is another one that I like a lot. The IPO, right? Still consolidating this, the due diligence or whatever, and maybe starting to enter its advanced phase. Once again, it's got these, it's got the Lord on its side. So say a prayer, and it's got, Danoff's Fidelity. I don't know there's a stock that he doesn't own. He's got so much damn money to spend. All right. Anyway, on the daily, you can see this, I talk about this all the time. This bull wedge pattern here, which shakes people out, pulls back to moving averages, and then ramps higher. And on Friday, it was up, another 3%. Anyway, let me go to the weekly. It was up, nearly 9% last week. So that's a strong move from STRL Labs. Anyway, that's it for the semiconductor names. I have to move on because there was bad news, I believe, from regulators that, Dr. No is, she's on a roll. And she won she blocked the Tapestry Capri move, to protect all the consumers from, gouging the handbags, if you're into buying handbags. So this stock, Tapestry, which was buying Michael Kors or Capri, had pulled back to its 50, and with the news, bounced, 13.5%. So Dr. No gets her way. It was good for Tapestry, but bad for the Jimmy Choo and Michael Kors group. Capri fell, God, nearly 50%. So they're really counting on that deal. And if you own Kroger's or Albertsons or Novo Nordisk or Catalent, I don't see those deals going through. If they're going to block an $8 billion handbag name, I'd be careful. Kroger's wants to, that looks pretty good actually, wants to acquire Albertsons. I'm pretty sure if they're going to block Michael Kors and Coach, and Kate Spade, they're going to block this one for sure. I'm pretty sure nothing is for sure in the market. You never know, but Dr. No has been blocking a lot of them, and also Novo Nordisk. Yeah, Dr. No's head of the FTC, and this one's just been selling off. And they announced the purchase of Catalent, and this, and then Bernie Sanders, the administration's been after them to lower prices. So they have a lot of headwinds here. They're going to report on November 6th. And I did mention Catalent, which was trying to be bought out by Novo Nordisk, but I don't see this. The FTC has been asking for information. You can see it's just been flatlined since that was announced. So anyway, I just had to throw that in there because it was some news that I thought was noteworthy. And if you own those stocks, you got to be careful. Because it's very likely that those are going to be blocked. All right, so I like pin action, like when Deckers announces, and you don't want to buy Deckers because it's too hot and going too fast. You look at the auxiliary plays here, and this is On Holdings, which had this bull wedge pattern back to the 50, found support, bounced nearly 7% on Friday, following that news from Deckers, which was really good news for the group. Skechers had good news too, but their forward news was not good, and they're just too promotional. Crocs, I don't know about Crocs because they're just way undervalued. They got the best margins in the business. They've got just as much sales as Deckers, but it doesn't get the multiple, and so you can't fight that. If the market doesn't want to give Crocs the multiple, you can see it just keeps coming down to its 200 and finding support. So I think this is good risk reward. The problem is the reporting earnings on Tuesday. So it's just consolidating in a base, but I think Crocs is going to do pretty good. All right. I've got it. Since I'm in retail, I'm going to go to the food group, and man, this stock CAVA has just held that 110 on that gap up day. Pretty incredible. The low is 110. It came down and tested it, retested, retested. Then it starts surfing, hanging 10 on the 10 EMA, pull back to the 21 one time, and then again, and now it's just surfing the 10 once again. And on Friday, it closed just a tick above its 10. So I think it's fine. It just reversed like everything else on Friday. Just selling into the closer. You can see that's the open. What about an hour in? The sellers come in, said, I'm taking profit. See you later. I'm going to go buy myself a salad at CAVA. Anyway, that's one that I really like. Brinker made a new high. I like new highs. Brinker making new highs. This is the chili Maggiano's, the margaritas I gotta go try one at Chili's. I hear that's the big draw there. And that's doing well. And then Shake Shack, another stock that I like this thing setting up. Problem is, it's reporting the day before Halloween, which is Wednesday, I believe. But I like the setup. Why? Well, it's showing the ability to move higher, trading tight within a base near its moving average. So it meets the criteria of stocks that I really like. Do you want to buy ahead of earnings? I don't know, maybe 1 or 2% positions, not going to kill me. Then I can add if it blasts higher. And if it trades lower, then I lose. You're a loser. Anyway, DoorDash. This is one that I like. I got to look at the weekly chart. One of these days, I'm going to make a video on some of the model book stocks that look similar to this pattern here. Obviously, during the bear market, I mean, it sold off 2022 like every other stock except for oil and gas. Then it's recovered, formed a base, ramped up, and now it's formed another base here. Up with handle pattern and then broke out. And it's been up, what, 6-7 weeks in a row here, and just trading higher. The problem now is they have earnings on the 30th as well. So you got to be careful. That's Wednesday, I believe. So anyway, I'm going to get to all the earnings for this week. I'm going to move on from the food group to some of the software names that I like, software names I might own. This is Spotify, and it's just, broke out. Broke out. It's kind of a choppy name. I'm going to go to the weekly because you can see these base on base on base. These are just flat bases, right? So it's just grinding higher. It's been up, what, how many weeks in a row here? 2, 3, 4, 5, 6, 7. Kind of like, the index. It's flat on the week, up 007, but still, just grinding higher. It looks good to me. The other one is Duolingo. This one, like I said, when leaders run like this, form this double bottom base, when they run like that, they're probably not going to form another base with the, indexes ripping like they are. So it just forms this shelf pattern as it pulls back to its 21. So it found support at the 21 and popped. And so, and I kind of like Duolingo. I put it on the ready list, I believe, on Friday, and then it moved, 3.6%, but I don't think that move's done. Now I'd like to see it get above the 300 level. It had trouble with 300 the last time it popped up there. It got rejected like Matombo. So we'll see if it can get through there. Anyway, moving on to some of the other software names that I like. AppLovin, obviously a leader. Like I said, this thing's probably not going to base like it did here. They're going to report November 6th, just surfing the moving average, forming this little shelf pattern, if you will, as it allows the moving averages to catch up. This little shelf here pulls back to the 10, and then what happens? This thing was up 11% last week. I had some people saying, "What's wrong with AppLovin? It's not moving." It was down Thursday. It was up 11% last week. People, relax. It's a hell of a move. Yeah, it was flat on Wednesday, down a little on Thursday. But like I said, it bounced off the 10. It was up 11% last week. Give it a break. I already mentioned ServiceNow, so I'm going to go to Palantir, another leader, broke out of that beige and just surfing the moving averages higher. So yeah, pretty tough to buy that one. They're going to report on November 4th. So we'll see if it continue its leadership. I think it will. GoDaddy, once again, a stock that's proven it can move. And I really like this one right here. Big move since December of last year, broke out, just ripped higher, no bases, just like 3 weeks tight, add on 3 weeks tight, gives you a couple of buy points. But now you can see it's forming this base here. And don't particularly like that big bar in this 1 week. Ooh, that's a sell-off of 10%. But it's consolidating within this base. So it made that new high, then sold off. September, the market's corrected as well. So it's been consolidating here for, I don't know, about 8 weeks now, formed this cup. And last week it was down every day last week, but it just was down like 2% and pulled back to its 21. That is a beautiful cup with a handle of a stock that can move rapidly. And it's got, pretty decent earnings, 87% in sales growth, but it's going to report on the 30th. So if you're thinking of buying this one, I would be careful buying a stock, in a later stage base with, earnings coming up. Maybe I might, 1 or 2%, probing position here. If you don't already own it, yeah, there it is, 8 weeks. Anyway, GoDaddy looks good. And not all the software names are doing great. This is ZETA Global Holdings. It had been running, and then sliced its 50 last week. There's a chance that it could rally right back through the 50, though. We're just going to have to wait and see. It was downgraded and did not handle the downgrade very well. And you can see big sellers coming into ZETE. So I would be careful with that one. Another software name sold off after earnings. And just, yeah, just, I don't know, forming a base down here. ESTC, this is, AI name should be doing, better. I mean, it's got 40% earnings growth, 18% sales growth. So we'll see what happens here at the next earnings report. It does have these, big blue numbers down there. But anyway, I'm going to move on. Whoops, excuse me. I have one more software name that I like. And you can see it's formed this 3 weeks tight pattern here. This is CLBT, Cellbrite. And there you can see the tight trading as it pulls back to its moving average. That has been a pattern there that has been rewarded lately. So definitely watching that one. All right, got to get to the miners. There's a lot of groups doing well that I can't get to. The defense names, some of the financials. But I'm just going to cover the miners quickly here. This is GATO. Broke out, ran higher as it formed that shelf pattern, broke out off the 21, now pulling back, allowing the moving averages to catch up in the gold, silver, copper. I cover it every morning. These things have been on fire. The commodities themselves are at all-time highs, and these stocks are doing well. This is a silver name, but we have some other ones. IDR, which is Idaho Strategic Resources. You can see the group is a top 10 group here. And this one just broke out of a base, just keeps ripping higher, forming a base and trading higher. That's a weekly chart. Here's your daily. You can see this breakout and just rip higher. So looks pretty good. When you have these type of numbers, that's going to move a stock. So anyway, a couple other ones in the group. Just acknowledging here, this is HMY pulling back to the 10. I kind of like that. And then Southern Copper is another one, just kind of pulling back to its moving average here, consolidating within a base. So yeah, not bad. Flagging there. So not bad there for Southern Copper is another one that I like. And yeah, nice little pullback wedge pattern there. So they've already reported earnings, and you don't have to worry about that. AGI is the last one. That's right. So you got gold, silver, copper, and of course CCJ, which is the uranium play. So that one looks good as well. Just pull back to its moving average after ripping straight up from the bottom. All right, I'm going to move on to the construction group, another strong group. This is Knife River. This is a concrete, name. I don't know, maybe with the infrastructure deal that they're going to have, growth for, longer period of time. Just looking forward. EXP, same thing here as it just pulled back, cement, concrete, infrastructure play, wallboard, Eagle Materials. So gypsum wallboard. Yeah. So anyway, the concrete and infrastructure stocks are doing well. This thing just formed that bull wedge pattern that we have seen rewarded so many times here recently as it pulls back to a moving average. That would be an area of interest for me. All right. Other names in the group, Quanta Services, which is well, really strong stock making new highs. And this one, what did it do? It just, formed that bull wedge pattern as it pulls back to its 21 here on the daily chart. If you look at the weekly, I mean, you can see this is just a monster. Just, yeah, it's a late stage base, but man, that thing is just a really super strong stock. And then Sterling, another one that's just, you don't have to hold these things for very long when you're into chips, man. This is the top 10 group. Pulled back because it's going to report earnings here pretty soon. So pull back to the 21. We'll see if that little wedge pattern is rewarded as well as it was here. Pull back to the moving average, ripped higher, pulled back again. So we're watching those. The last group, I talked about the leading stocks, leading stocks and leading groups. And this is GE Vernova, spinoff from General Electric, alternative energy. There's nothing to say here. It's just going higher, surfing the moving average. Definitely a leader in the group. And look at that thing, just up every week. So like I say, you don't have to hold it very long to make money. CEG, another one in this alternative energy group, broke out the deal with Microsoft and pulled back to its 21. That looks good. And then the other electric power utility group, this is Vistra, made a really strong move, 72 to 143, now just pulled back. And this one's, doing that little flag pattern here. So it's doing nothing wrong, just resting after a big move. So like that flag pattern there. And then TLN is another one in the utility electric power. Pull back to the 50, and now it's trading through its moving averages. That one looks good as well. And then PG&E, I'm not really fond of this company, but this chart looks good. And you can see it consolidated within a base, pull back to its 10. Yeah, they just go to the PUC, the Public Utilities Commission, whatever they ask for, they just rubber stamp it. So, stock's probably going higher. Anyway, they really, gouge their customers there in Northern California. I can attest to that. Anyway, that's it for me. Thank you for watching. Except for in honor of the great Steve Jobs, I have one more thing, and that's back to earnings. This week, Apple's reporting. This thing's kind of setting up in a base as well. I'm not saying that they're going to report and it's going to blast higher. I don't know. Nobody knows. But I do like the setup for Apple. There's been a lot of rumors that their iPhone's not selling well. If it pulls back, I would be a buyer of this thing if it can pull back to its 50 or something next week, or even undercut it. We'll have to wait and see what the response is and what they say. But this is just, one of the well-run companies and one of the biggest companies in the world. Microsoft. Now, to me, Microsoft is sold off, so it's got some bad news priced in here. It was 468, now it's 428. Got this downtrend line. I'm not a betting man. Speculate though, and I would speculate. I'm thinking the bad news is priced in. this thing's going to start trading higher, I believe. So they report on the 30th. We'll have to wait and see. Always got to wait and see. But so this is my theory that the Nasdaq's going to trade higher because these stocks are kind of set up. They've been sold off. I think investors are saying you got to prove it, right? Like they're from Missouri, you got to show me. And I think they will. They've been spending a lot of money, so we're going to look at their CapEx spending. But yeah, Google, again, the same type of pattern here. They're reporting on the 29th, which is Tuesday. So, Amazon's reporting as well. You can see it's just set up in a base. So I'm thinking that these are going to move higher and it's going to drive the NASDAQ higher, like we saw with Netflix and with Tesla. Kind of the bad news is priced in, or the investors are just cautious ahead of these very important earnings reports. And then Meta is going to report as well. This stock is it's performing a lot better. It's above its 10 EMA, but still it's a cheap stock in comparison to some of the other ones in this group. I think they're going to crush it. And I don't know if you like Zuckerberg or not. It doesn't matter. I don't allow personalities to interfere with me making money in the stock market. Don't do that. Just one day at a time. Meta, I think it looks set up to move higher. I'm not going to buy it ahead of earnings, but we have some other ones too. Some of the leading stocks that I like, Shark Ninja. This one, broke out, surfing the 10, now pull back to the 21, forming this little shelf type pattern. I'd like to see it above that 110.96. Carvana, this thing has been a beast. One of the top performing stocks this year, just grinding higher. They're going to report on the 30th. Let's see if it can blast through that 200 level. I mentioned CROX is reporting, and then also Chipotle. I think they've been doing pretty well. Also, this stock's kind of been, just lagging, but above its moving averages now. So that one looks pretty decent. It got hit when the CEO left. Maybe they'll name a permanent CEO here pretty soon. Uber made that big run on, I forget the news. It doesn't matter. It just pulled back to its 21 year and they report on Halloween. So will it be a trick or a treat for Uber? And then we have the crypto names. Coin is reporting. That looks set up pretty good. MSTR. This is all about how much Bitcoin has it bought. And this thing is just grinding higher, surfing its 10. That looks fantastic. Got a buy point there at 200. So maybe it'll report good news and pull back to that 21 and then give you a chance to get in if you don't already own it. And then Hood. That's it for me. They're reporting on the 30th. So thank you for watching at mcstockcharts.com. We never give up.